Hello, good evening. Welcome to Unacademy. Good evening, good evening. How are you guys? How are you all? Let me know. Am I audible, visible, all clear? Good evening, Deepa. Good evening, Shanti. Audible? Yeah. Okay, great. Okay, before I begin, let me tell you that what are we discussing here? This is my second session, second class for the discussion of this May 22 exam RTP. My first class was yesterday, so if anybody missed that first class, you can check out my class on YouTube again. Recorded sessions is available. This is my second class for the RTP discussion, May 22 RTP. Almost half the questions of RTP we were done. Remaining half we are now going to discuss. Yeah, it is applicable for students appearing in May 22 exam. Also for students who are gonna appear in November 22 exam. Yeah, both these students, both these types of students, for them this will be applicable. Now, before I begin, certain important announcements for you. Announcements that yes, I'm sad to announce that Unacademy will be increasing the prices by 25%. There's going to be 25% hike in the prices for CA Intermediate. Yes, for CA Intermediate, there's going to be 25% increase in the price in the next couple of days. So 3 days to go in the next 3 days. So take your subscriptions today. Tell your friends, tell your juniors who need a subscription, tell them to take your subscription before the end of this month in order to get the benefit of the low price. Within that also, you can use code YASHAS to get 10% discount on these subscriptions. Um, for CA final subscriptions, you are getting additional months right now. Some offers are there. Under the offers, you can get some additional months for your CA final subscriptions like these. And you can use code YASHAS Live again to take another 10% discount on these subscriptions. This is for Group 1. Same offers for Group 2 CA final also. And similar offers for combo, Group 1, Group 2 combo. Again, in that also, you can get additional months with the subscription right now. And you can use code YASHAS Live to get again 10% discount on your subscriptions. Also, happy to announce that for CA Final, we have already launched the Iconic program. Iconic is the premium subscription. Under that, you get live mentoring. Live mentoring, as in there will be one-to-one strategy sessions that are conducted for you. There will also be test series, and the test papers will be evaluated. Printed copies of the books will be given, and all the regular benefits of plus classes are always there. Okay? See, plus classes or even the special class, free classes on Unacademy are much more convenient than the classes on YouTube, because you notice that on YouTube classes the interaction is not very much live. After you type your message, you get, it takes around 20 seconds for me to receive it. After I speak or explain, it takes around 20-40 seconds for you to receive it. So there is a lag always. You might not notice, but it will not be 100% live interaction. Plus, you don't get various other tools on YouTube for interaction. On Unacademy platform, you can also have the live chat or live audio discussion with the faculty. Okay? Under the mentoring program, you'll have the evaluated test series where the test will be conducted in 3 stages. First test at 40% syllabus completion, second at 80% syllabus completion, and the third one at 100% syllabus completion. These tests will be followed by analysis class, and after analysis, they'll also be giving you feedback regarding your performance in the test. Okay? This is the pricing for Iconic subscription Group 1, and these are the pricings for Group 2. You can also go for combo subscription Group 1 plus Group 2, and you can use code YASHAS Live for getting 10% discount on these subscriptions. Okay, so that's regarding your announcements. But now coming back to our RTP, we discussed first 4 questions of RTP yesterday. Am I right? Yeah. And in those 4 questions, let me know if you have any doubts in those 4 questions. Tell me if you have any doubts in these 4 questions. We'll discuss them, then we will proceed to the next questions. Good evening, Vaitayi. Welcome. Okay, no doubts. So I'll proceed with some more questions of the RTP. See, all questions we are not going to discuss. Some questions I'll just give you overview. Certain questions I will discuss in detail. Yeah. The next question we discuss is question number 5 in that RTP. CA final costing. Question number 5 in the RTP. Now, this question is a new kind of question. We have not done anything like this in the class, but it is still easy to understand. It is like a very general kind of question, generic question. Let's see. It's about KPI. Well, you know what is KPI. KPI is the measurement of how you measure performance and the relative targets with that. Remember? Yeah. Paridhan is a ready-made garment brand of Vignesh Apparel and Garments Limited, VAGL. VAGL has a chain of retail stores outlets throughout the country wherein they offer a range of ready-made garments under the brand Paridhan for all ages and genders. Okay, so your company is a garments company. The decision of pricing and advertising are taken place at the strategic level head office, and the stores are bound by that. Okay, Mr. Pradeep Shukla is the zonal manager for the North Zone, surprised to notice the variation between performance of different stores. During the zonal meeting, the manager of different stores offered their key pieces of information, which was complex and insufficient to make a proper comparison of the performance among the stores. So, your main goal or main purpose here, target here, is to compare performance among the stores. Mr. Sanjay Tripathi, the chief management accountant of the company, was also present during the review meeting. Some of the stores, despite being large in size, like large in size in terms of space and holding large quantum of stock, that large stores not able to register sales comparable to size. So large stores will have large sales, obviously, but it is not as large as the size of the store. It is not as large as it should be in comparison to the size of the store. Whereas some of these small stores have high conversion and basket size. Now see, these are new terms with respect to costing, but these are not new terms with respect to general knowledge. Conversion means what? Conversion means that how many customers walk in and how many of them are actually getting converted into sales. See, it is a retail store, garment store. Now, so many times you go to the garment store and just do window shopping. Like you don't actually purchase anything. You go to the store, you see many things. You probably even try out certain garments, but you don't buy. If you don't buy, meaning you did not convert. Conversion means how many walk-ins were actually converted into sales. That is called as conversion. And basket size is like basically order size. Like one customer comes to my store, and is it necessary that one customer will come and purchase only one garment? No, each customer might be purchasing multiple garments. So per customer, how many items did he purchase? How many items did he put in his basket, in his cart? That is called as basket size. Yeah. So basket size basically indicates that how many items each customer has bought. Okay. For instance, the monthly details pertaining to 3 stores located in the same city on different locations are tabled below. You are given details about 3 particular stores of a particular city. You are given details about 3 stores: Sadar Bazaar, Central Market, and Model Town. There are 3 different store details you are given, and you are given many details about these stores. Well, you have to suggest that for comparing one store with another, for comparison between the stores, which of these criteria should be used. They have given many details about each store, but which detail should I use for comparing the stores with each other? Like for example, you are given total number of items received at each store. Like see, these are retail stores, so they will receive items from the head office. So number of items received at each store, and from that number of items sold at each store. Now this store, just because this store, Sadar Bazaar, has more number of items sold, does it mean this store has performed better? Can I simply say that this store has performed better because it has more items sold? Yes or no? Yes or no? Yes, Shobhit. Shobhit, thank you very much. In fact, it's very convenient. You should try it actually. Yeah, I've been doing this since last 1 month, but it's actually very convenient. You should try it. So, number of items sold is more. So, does it mean that this is the best store? No, actually. See, this store has more number of items sold because more number of items were given to them. Also, because it is the largest store in terms of the size of the store. You see, in short, the individual criteria given over here, individual details given over here, might not be, these individual details will not be actually comparable. If you want to compare with other stores, then you need some other KPI. The question is asking you that what KPI must be used for comparing this store with the other store. So out of all these details given, which are given, we will decide that what KPIs can be created. Okay? Yeah. So let's see. Out of all these details given, we will decide what all KPIs can be created. Let us finish reading the question first. So, are given the number of items received, number of items sold, total customer walk-in, total walk-ins from the customer, and a total number of invoices, bills. So, total number of bills meaning total number of customers who purchased something. Yeah, out of all these walk-in customers, bills generated, invoice generated were only this much. So it means that out of all the walk-in customers, only these many customers have actually purchased something. Okay? Total actual sale in rupee value. See, this is the number of bills, and this is the value of sales, value of actual sales you are given. Target sales, budgeted sales for each store you are given, and last month sales you are given, store size you are given. All these criteria you are given. Now see, individually as such, none of these criteria can be used for comparing the stores. Individually, none of these criteria can be used for comparison. What you need to use for comparison is some ratio. Ratio. Like Deepa, you say that yes, the value of sales also matters. Agreed. Not just value of sales, Deepa, many other items matter. So we will be deciding a KPI in terms of some ratios. Let us finish reading. During the strategic meet of all the zone heads and top officials of the company, Mr. Sanjay expressed the importance of linking the KPI to CSFs and CSFs to objectives in order to attain the strategy. He stressed on the use of a uniform KPI scorecard for all the stores across the nation so that comparison becomes easy. Naturally, the KPI which you use has to be uniform. The same KPI can be used for comparing. The same KPI can be used for comparing multiple stores. Okay? Hence, it was mutually decided to develop the set of KPI that can ensure the store's internal efficiency and performance. Mr. Pradeep interested in knowing that how store managers can improve performance of the store in terms of the set of KPIs at his own level without using many resources. He mentioned that quality of the product is a factor that is beyond the control of the store manager. Naturally, quality of the product is not in the control of the store manager because store manager is not producing the product. He is just the manager of the retail store. Okay? And the question is, recommend the set of KPIs that can be put to use at the company to measure and compare the store's internal efficiency. So you suggest what KPI can be used. So no, out of these items, let me suggest some of the KPIs to you. Tell me, can you simply compare the stores based on number of items sold? Based on the gross number of items sold? No. This gross number of items sold should be considered along with what? Should be considered along with what? Well, it can be considered along with many other factors. Let's say I can consider that along with number of items received. Yeah, you can consider a ratio between items received and items sold. Received is to sold ratio or sold is to received ratio. This can be one of the KPI, that out of how many items received by the store, how many items were sold. See, out of 7,800 items received, if 6,920 items are sold, so remaining items are still unsold, like closing stock. So that can give you your ratio of received versus sold. Okay? Yes, Deepa, your value of sales also matters. So what you can do is, my value of sales, this is the value of sales divided by number of items sold. What should that give you? Yeah, your total value of sales divided by the total number of items sold. What would you call that? Well, I can call that as the average selling price per unit. Total value of sales divided by total units that you sell, that can be considered as average selling price per unit. That can be another factor for comparing the divisions. What else can I use? Let's say you have the number of customers walk in and the number of invoices, bills. So number of walk-ins divided by number of invoices. It can give you what? It can give you a ratio between how many customers are coming in and how many are actually buying the goods. That can give you a conversion ratio. Yes, out of 10,000 customers walking in, only 3,000 are actually buying. So 10 is to 3. The conversion ratio is around 30%. Out of 10,000 customers walking in, only approximately 3,000 customers are actually buying. That can give you a conversion ratio. That can be another factor. Yes, see, if this store has more walk-ins, naturally it will have more sales. If the central market has less walk-ins, it will have less sales. So just because it has less invoices does not mean it is a bad store. You compare that invoicing based on the number of walk-ins. Yes, that can be one criteria. Also, you should consider the store size. Store size can also be considered. You can consider the store size with respect to the value of sales. The value of sales divided by store size can also be one KPI. My actual sales value divided by the store size can give you sales per square feet. So per square feet sales of every store you can identify. That can also be a KPI for comparing among the stores. See, based on these details given, so many different aspects can be identified. You can also make a ratio between actual sale and target sale. Yeah, your ratio can be made between actual sale and a target sale. That can tell you that which store achieved the targets, which store did not achieve the targets. Yeah, so target achievement or target completion can be understood based on that. Actual sales based on with the ratio of the target sales. Okay. You can also take actual sales divided by number of invoices. Yeah, what will that give? My sales divided by number of invoices, what will that give? that can give me the sales per invoice. That can give me the sales per invoice or sales per customer. Yeah, that can be my sales per customer. Also, you can take number of items sold divided by number of invoices. Number of items sold, total number of items that you sell divided by total number of bills that you generated. What will this give you? Well, this will give you basket size. Basket size means per invoice. How many items did you sell per invoice? Like each customer has taken how many items. Each customer basket contains on an average how many items. That is my basket size. So see, so many different criteria you can identify based on the data given. The crux here, the logic here is that gross amount or the gross data cannot be used for comparison. For comparison, what you should use is a relative data ratio data. You notice 7 items I have mentioned here. All 7 are some or the other types of ratios. Do you understand these 7 items? Yes. Yes, Shanti, that can also be compared. You can compare actual sales with the last month sales also. But I prefer to compare with the target sale, because if target is given, then it will be better to compare my actual with the target. Okay? Yeah. Or what you can also do is you can compare last month sale with the target. Assuming that last month also target was the same, so you can say that which division has fulfilled target last month and also fulfilled target in this month. Maybe some division did not fulfill target in last month, this month also did not fulfill target. See, model town last month did not fulfill the target, but this month they have fulfilled the target. So it seems that model town, that particular store, has improved very nicely. Yeah, so yes, you can use that also. See, for this question, they're asking you to recommend KPI. So it's not necessary that every student will have the same recommendation. Ultimately, you have to recommend certain KPIs based on these details which you are given. Yeah, it is very much possible that your answer can be different from the answer given here. But as long as you can explain interpretation of your answer, then your answer is valid. Okay? Deepa, you could recognize only 3 KPIs. But Deepa, you see there are so many items given here. If you could recognize only 3 KPIs, then how did you use the remaining items? Just try to make use of most of the items. You'll be able to think of more KPIs. Okay? Yeah. Anyways, let's see the answer that they have given. The KPIs that they have given, let's see, they have given first as the basket size, that is number of items divided by number of bills. We did that. They have given average bill value, that is average value per invoice, average sales per invoice, that is sales per bill. So total sales divided by total number of bills, that also we did. Items divided by bills, that was number 7. Sales divided by bills, that was number 6. See, the sequence might be different. In my discussion, this was item number 7, this was item number 6. Conversion rate is like out of all the walk-ins, how many customers actually got converted into sales. That is my conversion rate. We did that over here. Yeah, number 3. That was my answer. My answer, that was number 3. Average selling price, that is sales divided by number of items. We did that also. Sales divided by number of items. Sales divided by items, that was number 2 in my answer. Yeah. Then sales per square feet. You can also take the sales divided by square feet, because every store has different area, different square feet. So sales divided by square feet can give you one measure. In my working, it was number 4. Sales through ratio. Sale through ratio means a ratio between number of items sold and number of items received. We did that over here. Sold versus received ka ratio. That is first ratio that I told you. And Shanti, this is answer to your question. See, Shanti, either you compare this year versus last year, or you compare target versus achievement. Either of that comparison you can do. You can compare this year versus previous year, or you can take actual versus target. Yeah, any of that you can use, or maybe both you can mention. So that is also given here. Anyways, total six KPIs they have given. See, we could identify 7, but that's okay. So you can mention as many KPIs as you can think of. Okay, that was your part 1 of the question. Second part in the question, comment the performance of 3 stores based upon the KPIs by making comparison interstate. So now they have asked you to comment on the performance of each store based on the KPIs which you suggested. So whatever KPI you suggested, these KPIs which you suggested, you have to calculate these these KPIs for each store. And after calculation, you have to comment. Well, comment will be very simple. For each KPI, you will simply comment that which store is better and which is worse. That's it. Nothing much to be done. Yeah, you can see the comments over here. Basket size, that is items per bill. You take the sales divided by number of items sold divided by number of bills, gives you items per bill, and you identify that for every store, and you then suggest that which store has best performed and which store has least performed. That's the comment. Yes, so comment part is actually nothing pertaining to theory. Comment part is simply pertaining to the answer that you got here. Tell me, would you be able to study that? I explained you all the KPIs. You just have to calculate the KPI and say that which store has performed better or worse. I'll just help you with one thing. My basket size means items per bill. In this case, higher the better. More basket size, better is that store. In case of ticket size basically means the sales per bill. Sales per bill or sales per invoice. Well, that sales per invoice is also higher the better. Conversion rate, how many customers are finally buying out of all the customer walk-ins, again higher the better. Average selling price, price per item sold, that is each item ka average selling price, again higher the better. Sales per square feet, again higher the better. So based on that, you just identify which is the better division, better store. Sale through ratio is items sold versus items received. So sales versus received, again there higher the better. More ratio means more items are sold out of whatever you receive. And this month versus last month sales, again this month sale versus last month sale, higher means the sales has increased. Okay? And target versus achievement, actual divided by target. This is actual divided by the target, again higher the better. Done? Yes. So tell me, can you study the calculations on your own and the comments on your own? Yes, at the end you can also give comment on overall performance. Comment on overall performance is simply that which store has performed best overall, which store has performed not very good overall. So general overall comment also that you can read. Third part in the question. See, as I told you, I will not be discussing all the questions in complete detail. I will discuss the new things only. The identification of KPI was new in this question, so that I discussed. Okay? Yeah. Okay. The third question is asking advise the store managers the marketing initiatives other than quality, price, advertising, and value chain of the product, which they can practice in order to improve performance of the store in terms of the KPIs suggested, blah blah blah. In short, they are asking you to suggest the store manager to improve performance of the store without significant application of resources, and they are asking your suggestion other than quality, pricing, advertising, and value chain. These are the suggestions, like basic suggestions. They don't want these basic suggestions. You suggest something else. Now what they suggest here is something that we have done in our syllabus. You suggest three things: upselling, cross selling, and add-on selling. Upselling means what? Upselling, yaad karo, means what? We've done that. Upselling means that when a customer comes to buy some product, you convince him to buy a more expensive product. Yeah, you convince the customer to buy even more expensive product. That is called as upselling. Cross-selling means when the customer comes to buy some product, you convince him to buy other related products also. Yeah, so other related products you ask him to buy, that is called as cross-selling. And add-on selling means you try to increase the units bought by the customer. Additional item you will ask him to buy. It might be complementary item or identical or maybe purely different. You just convince the buyer to purchase more units. That is called as add-on selling. All these suggestions will help you increase your sales at the store. Okay, okay, so that is question number 5. That was a new kind of question. See, in the entire RTP, in my opinion, only two questions are new. Question 4 and question 5. Question 4 we did in the last session, that was pertaining to MTBF and MTTR. That was a new concept. And question 5 is a little bit new because it pertains to creating the KPIs. Huh? Tell me, any questions over there? Can I proceed? Okay, we'll proceed. Next, question 6. A very easy, simple question regarding transfer pricing. Yeah, this is quite exactly similar to what we have done in the classwork. So there's nothing new in this question. This question is equal to our classwork questions. Let's see. Curable Limited is a pharmaceutical company that has many divisions. One of its division A produces chemical vials that can be used for storage of medicines. These chemical vials have both internal and external market. Division B is another department of the same company which uses the vial to package some of the medicines it produces. So Division A transfers a product to Division B. Following is the information regarding production at Division A. The given annual capacity is 35 lakh vials. Annual production is 25 lakh currently. Internal transfer to B is 10 lakh units and external sales is 15 lakh units. So currently their production is 25 lakhs, from which external sale is 15 and 10 lakhs they are doing for internal transfer. Still they have spare capacity of another 10 lakhs. So you see that the division A has enough spare capacity. In fact, out of 35 lakh full capacity, their external sale is only 15 lakhs. You see that? Out of 35 lakhs total capacity, their external sale is only 15 lakhs. So that's actually a huge difference. You see, out of their total capacity, not even half the capacity is being used in Not even half the capacity is being used in external sale. Yeah. Further, Division A incurs variable cost of production 800. Fixed cost of production of Division A is 50 crores. Out of this, 15 crores is for machinery and production infrastructure for internal sales to Division B. This has been procured to produce or modify vials exactly as per specifications of Division B. Now this is the new part. See, whenever we did transfer pricing questions in our class, we mostly ignored the fixed cost under the assumption that fixed cost is common cost of the company. You remember we taking that assumption? When nothing is given, you assume that fixed cost is common fixed cost of the company. And so fixed cost was ignored in calculation of minimum TP. But here, is the fixed cost common FC of the company? No, here the fixed cost is not the common FC. If it is not the common FC, see, out of total 50 crores fixed cost of this Division A, 15 crores is specifically for a machine which is required to modify the vials, especially for Division B. So in short, this 15 crores is the fixed cost especially incurred for transfer. So out of total fixed cost 50 crores, I can split that in two parts. Out of total fixed cost 50 crores, 35 crores might be the general fixed cost, but 15 crores is special fixed cost specifically incurred for the transfer. Now think, if Division A is specifically incurring 15 crores only for the transfer, if it is incurring specifically 15 crores only for the transfer, then wouldn't Division A want to recover that 15 crores from the minimum TP? In short, minimum TP calculation should include that 15 crores. Do you understand this? Because it is specifically incurred for the transfer, I'll say therefore it must be included in minimum TP. Yes? Okay. Read further. That's the only new part in the question. Baki everything is quite easy. As per the company's current procurement policy, since Division A is operating at less than full capacity, so B has to purchase entire requirement from A. A charges B at full cost plus 2% as its transfer price. Okay, so A is charging B at full cost plus 2%. It's not a relevant cost plus 2%, it is full cost plus 2%. This is in tune with the company's overall transfer pricing policy that is used for interdepartmental transfers. The performance assessment of each division manager gives emphasis on overall financial performance of the department. Okay, naturally, that is as usual. Recently, the manager of B has received a proposal from the external vendor. See, now external vendor has given a proposal where chemical vials can be procured for 1050 per vial. So external vendor is offering it at 1050 per vial. We call this as the buy price, purchase price of ready material. The product specifications would be suitable for requirement of B, and hence they are comparable with the customized product that A makes for B. Yeah, so that is anyways a ready material that you can purchase from outside. Required manager of B would like to purchase vials from the external vendor. You are required to calculate the internal transfer price based on full cost plus 2% markup. So first you need to calculate the given TP. Yeah, the first step you need to calculate the given TP. See, this paragraph here is telling you about the given TP. which is equal to full cost plus 2%. Now, what items will be there in full cost of division A? Well, full cost of division A will have 800 rupees variable cost first of all. Yeah. Then after, your fixed cost is 50 crores, but that 50 crores fixed cost is in two parts. 35 crores is general FC and 15 crore is specially incurred only on the transfer. So if division A calculates full cost of the transfer, then you have to segregate both these costs and distribute that among the units. My general FC will be distributed among which units? General FC will be distributed among all units of division A, while this particular 15 crore fixed cost, this 15 crore fixed cost will be distributed among only the transfer units. Yes, so let's see, 35 crores divided by total units. Total units is 25 lakhs. So 35 crores divided by 25 lakhs. 35 crores is 3500 divided by 25 lakhs is 140 per unit. While this 15 crores will be distributed among only the transfer units. So 15 crores is 1500 divided by 10 lakhs. Transfer units is 150. So use that in my full cost. 800 variable cost plus 150 is the special cost incurred on the transferred units, and plus 140 is the general FC. Because see, when they are following a full cost method, then you will take full cost. Even the general FC you have to take. Yeah, this becomes the full cost, and in this full cost plus 2%. What do we get? 800 plus 150 plus 140 plus 2%. Makes it 11112, I can say. So you see that the given TP is 1112 and the purchase price of ready material is 1050. So obviously that is the reason why division B, that's the reason why division B would like to purchase from the external vendor. But as the general manager of the company, what would you suggest? Well, as the company management, you have to suggest based on minimum TP, maximum TP. So you tell me, what should be the minimum TP that A should demand? Minimum TP that A must demand will be what? I'll wait for you. Chalo, you recommend. Maximum TP is easy. Maximum TP is the purchase price. $1,050. But minimum TP, you need to tell me. Yes, Deepa, brilliant. So minimum TP that division A will want is equal to variable cost plus the specific fixed cost. The fixed cost specially incurred for the transfer is the fixed cost specially incurred for the transfer is 15 crores for 10 lakh units, that is 150 per unit. So 800 plus 150, 950 becomes the minimum TP required. Yeah, 950 is the minimum TP that division A wants. 1050 is the maximum TP that division B is ready to pay. So for the company as a whole, is there a net benefit? Yes. Net benefit of 100 rupees. Yes, from the viewpoint of company as a whole, there is a net benefit of doing internal transfer. Internal transfer will give them net benefit of 100 rupees. Do you understand this? Yes. Yeah. So from the company viewpoint, my recommendation is that yes, internal transfer should be done. Yeah. Let's see all the questions there. First question, calculate the transfer price based on full cost plus 2% markup. Well, that turns out to be 1112. Why are you not giving me two? Yeah. Second, discuss the transfer pricing methodology. Discuss the current transfer pricing method, pros and cons. Which is the current method they are following? Current method they are following is the full cost plus method. Now, full cost plus method, you remember in classwork theory, in my book, in the theory of my book, I have given you advantages, disadvantages under every method. That's exactly what you're supposed to write. Advantages and disadvantages of full cost plus method. I'll tell you orally. Advantages of the cost plus method is what? Advantages is that division A can recover full cost. Plus division A can get some marginal profit also. Okay? Disadvantages is one main disadvantage, that in this case division A does not have motivation to do cost control, because whatever cost he will incur, he can get it recovered from division B, so he will never be motivated to do cost control. You can see in this question that division A is having so much excess capacity. Division A is having so much excess capacity out of 35 lakhs full capacity. External sale is not even half of the capacity. So they are having so much excess capacity, even after using the spare capacity in a transfer, still they have 10 lakhs spare capacity. Yeah, so the problem here is that division A is having so much spare capacity, but when they follow full cost method, when they are following the full cost method, so you notice that entire fixed cost of 50 crores, entire fixed cost of 35 crores got distributed among the total production 25 lakhs. Did I distribute that cost among the full capacity? No, I distributed that cost among the used capacity. Yeah, so even though in that case that full cost will be recovered from either the external customers or it will be recovered from the other division. So that is why division A is never having motivation to do cost control, because whatever cost it incurs, it is still getting it recovered. Yeah. So my suggestion here would be that division A should at least try to reduce that excess capacity. Either try to make use of the empty capacity, or maybe sell out some machine, reduce your capacity. Yeah. Because there is unnecessary high fixed cost. They are incurring 35 crores, a very high fixed cost, but they are not even using that full capacity which they are spending 35 crores for. Okay. Should the management permit division B to procure chemical vials from the external vendor? No. Management should tell division B to procure from division A only, and division A should be asked to charge minimum TP of 950 only. Yeah, division A should be asked to charge a TP between minimum and maximum, between this minimum and maximum. Done? Yes, they should charge a TP between this minimum and maximum so that it is acceptable to both the divisions. Of course, with that TP, imagine if they charge a TP between this minimum and maximum, with that TP, it is very much possible that division A will incur losses. Why? Because that TP is lesser than division A ka full cost. It might be lesser than the full cost of division A. So division A might incur losses in that case. But to prevent that losses, you suggest to them, that division A must try to reduce his capacity. Done? Yeah. That's question number 6. That is question number 6. So I'm not discussing the solution of that because it's a simple question. Question 7 is also directly from my book. Yes, it's in exact same word to word same question from my book, chapter 1, question 7 from my regular batch book. For the fast track students, you did not have this question in your book because it is a very simple and easy question. So I have not put that in the fast track book. But it's still a very simple and easy question. Question 7, you'll have to study on your own. Okay? Question 8 is again a simple and easy question, decision making question. That will also be your self study. It's a basic question about relevant costing. In fact, we have done so many questions about relevant costing. This will be a cakewalk for you. Yeah. Yeah, but question 9, standard costing, we will discuss. Question 9, we'll discuss. Let's see. During September, Mr. W offers bundling and item packaging facilities to give best facility to satisfy industrial customers' need at the Great Ocean Warehouse. Okay. W plans to pack. Plans meaning budget, estimate. So as per your plan, you plan to pack 93,750 items, units at the rate of 4.5 per unit. So units you are given, selling price you are given as per the plan. Yeah. W estimates that variable cost will be equal to 1.5 per item packed, and that fixed cost, rent, electricity, maintenance, etc., will be equal to 58,000 per month. Okay. Now this is your budgeted data given. Then you are given that in September, meaning now you are given the actual data. In September, you packed 112,500 items and received this much as total revenue. So your revenue is given, actual sales, actual units you are given. However, W paid rupees 1,80,000 on resources. That must be considered as your variable cost. Why variable cost? Because they have given it includes the purchase of tape at a retail price. Now, purchase of tape which is used for packaging is an example of variable cost. So consider that entire 180 is your variable cost of actual. In addition, W paid 70,000 to warehouse administration for rent, electricity, maintenance charges. Well, it means that these 70,000 is like your fixed cost. Rent, electricity, maintenance charges. This is like your actual fixed cost. Further, this past September was usually hot, and W is charged a percentage of warehouse actual electricity bill. Actual. Now that is important. You are charged a percentage of actual electricity bill. So notice, this means that the cost which is charged to your warehouse is not based on a budgeted absorption rate. It is not based on a budgeted absorption rate. It is the actual cost which is charged to your warehouse. What does this mean? What does this mean? Any idea? So they are not using a budgeted absorption rate. Can you tell me what does that mean? The question is asking you to make reconciliation. I'll give you a hint. Remember which all types of reconciliation have we learned? Which all types of profit reconciliation have we learned? And which profit reconciliation will you do over here? Come on, so much hint I have given. Now you should be able to answer me. The company is such that they are using actual electricity bill for charging the cost. So budgeted absorption rate is not used by them. A budgeted rate of absorption is not used by them. Then which type of reconciliation will you make? See, this is the maximum hint I can give. No? Okay, I'll tell you. Well, if the company does not use a budgeted absorption rate, it means that they follow profit reconciliation by marginal costing method. And under marginal costing method, yaad karo, under marginal costing method, which all items would come in your profit variances? Under marginal costing method, you will have the total profit variance, but then under that total profit variance, under the total profit variance, you have sales price variance, total cost variance, and contribution margin volume variance. Not the profit margin volume variance, but you will have contribution margin volume variance. This total cost variance will have variable cost variance and the fixed cost variance. But the fixed cost variance, yaad karo, will be only budget variance. Well, tell me, do you remember this? Well, tell me, do you remember marginal costing reconciliation? If yes, then only we can proceed. Yes? Yes? Well, why didn't you answer first? Okay, anyways, I'll show you the workings there, chalo. So let me show you how to make my data table here. I'll try to cut short and make a faster version of the data table. Instead of making a separate data table for profit and then cost, I will make a profit statement, and that itself I will use for the data table. Yeah, let's see. My standard given, meaning as per the original budget, you plan to pack 93,750 items at 4.5 per item. This becomes my sales. So 93,750 at 4.5 makes it 421,875. And you estimate that variable cost will be 1.5 per item packed. So 1.5 per item for 93,750 items. My variable cost will become total 140,625. And fixed cost of the budget is given 58,000. So can get the budgeted profit 421,875 minus 140,625 and minus 58,000. My budgeted profit becomes 223, 250. And this is my budgeted profit out of how many units? This is my budgeted profit out of how many units? Out of 93,750 units. Okay. Then actual details you are given. Actual units are 112,500 and actual sales is 506,250. 112,500 at some selling price gives you actual sales. Gives me sales 506,250. So you can convert that into selling price 506,250 divided by 112,500. Well, good. Selling price is same 4.5. Well, one thing I can conclude here, if my budgeted selling price 4.5, actual selling price also 4.5, so naturally sales price variance will be 0 because the price is not varying. Yeah, so sales price variance can be directly put as 0. And the cost details of the actual variable cost 1,80,000, actual fixed cost 70,000. Put them as it is here. So that gives you actual profit 506,250 minus 180 and minus 70. 256, 250. So chalo, you have your budgeted profit, actual profit. Difference of these two becomes my total profit variance, and your profit, you see it has increased. Profit has increased, so it will be favorable. 256, 250 minus 223, 250. Total profit variance is positive 33,000. Out of that, we already saw that sales price variance has to be 0 and contribution margin volume variance, CMVV. Well, CMVV formula I'll give you. It is standard contribution rate into volume gained or lost. Well, standard contribution rate. Yes, Dheeraj, you are telling me CMVV. Let's see. My standard contribution rate will be how much? My standard contribution you can get from here. Sales minus variable cost of the budget will give me standard contribution 421,875 minus 140,625. My contribution is 281,250, and that is the contribution from how many units? 93,750 divided by 93,750 gives me standard contribution rate as 3. And volume gained or volume lost? Well, 93,750 was my budgeted volume. Actual volume 112,500. So difference 18,750 is my volume gain. Standard contribution 3 into 18,750 volume gain. Dheeraj, what was 32,000? I don't know. Yeah, this is 56,250 favorable. Yeah, so I get my CMVV 56,250 favorable. And for the cost variance, variable cost variance, fixed cost variance. See, fixed cost variance will contain only budget variance because we are doing marginal costing method. And under budget variance, your formula is simply budget minus actual. So that will be budgeted fixed cost 58,000, actual 70,000, difference 12,000. Adverse because fixed cost has increased. Simply put that as adverse 12,000. Yes, and my variable cost variance. Variable cost variance will have to be standard minus actual. This cannot be budget minus actual. Variable cost variance has to be standard minus actual. So see, in this question, the standard you have to identify only for the variable cost variance. Okay, Dheeraj, 33,000 was the TPV. Yes, so 32 was wrong. Okay, my standard needs to be created only for the variable cost. So tell me, standard will be of how many units? My standard should be for how many units? For 1,12,500 units. Yes, standard has to be created for 112,500 units. Now, this variable cost is for 93,750 units. So 112,500 units, what should it be? 140,625 divided by 93,250. Sorry, 93,750 is 1.5 per unit. We are already given 1.5 per unit into 112,500 makes it 168,750. So 168,750 becomes my variable cost of the standard, and then standard minus actual. So this standard minus this actual makes it 11,250 adverse. Yes, now check all your values. This plus this and this. The total should match with 33,000. Yes, it will match. That's your answer. Reconciliation. See, actually, this question was pretty simple, but standard costing a question in the RTP, I always have to discuss because the way they give a solution in the RTP is very confusing. Yeah, I will simplify that solution and explain that solution by the method we did in a class so that becomes more easier for you. Huh? Yes, any questions here? They're also asking you to show analysis. For analysis of variances, you remember in my regular classes, I have given you guidelines regarding how to write analysis in every question. That same guidelines which we have done in class, you need to follow them here. Yeah, we'll proceed. That was question number 9. Question 10 will again be your self-study. A very general question it is. But question 11 is quite interesting. Question 11 is an objective question. They have given a long list of fill in the blanks. Total 25 or 30. Yeah, 28 fill in the blanks given over there. So it's a long list of fill in the blanks given. And they have also given you options. Like what should be put in the blank. You have to choose out of these options. Yeah. Now certain fill in the blanks out of these 28. Some of them are very general kind of blanks. So what happens is sometimes when you are asked such question in the exam, what I recommend is that you fill up as many blanks as you can. Whatever you fill up, you cancel out those answers from the list of answers. And then the remaining answers which are left, you need to distribute them in the general questions. Certain questions are very general kind of question which can have multiple answers, which can actually have multiple answers. So don't answer such blanks initially, you answer the remaining blanks, then whatever answers are left residual, you try to arrange them in the remaining blanks. Let's see. I will not discuss, so I'll discuss most of them. First one, the 5-force model provides a clear and precise methodology for analyzing an organization's industry environment to determine its what? Well, to determine its profit. 5-force model we've done in chapter 1. And these 5 forces are forces affecting what? So these 5 forces are forces affecting my profit. याद करो, what were these 5 forces? Bargaining power of the buyer, bargaining power of the supplier, threat of entry, threat of substitutes. You remember all that? Yeah. Each of that force is basically affecting my profit. These are the threats that affect my profit. So ultimately, all that 5 forces are the forces which are affecting what? Affecting my profit. That is the threat to my profit. Second, the more substitutes buyers have for an industry's product, the dash bargaining power of the buyer. So now you tell me this. If there are more substitutes available, then buyer will have what? More bargaining power or less bargaining power? Just tell me this answer. If there are more substitutes, then does the buyer have more bargaining power or less bargaining power? Exactly. If there are more substitutes, yes, Dheeraj, yes, Deepa, Vaidai, thank you. If there are more substitutes, then buyer has more bargaining power. And if the buyer has more bargaining power, so your profitability will be what? More or less. Your profitability will be more or less. Naturally, if the buyer has more bargaining power, then my company profitability will be lesser. Yeah, I will have less profitability if the buyer has more bargaining power. Yeah, you can search out these answers from this list of answers here. See, it may not be exact words, but similar words might be there. Instead of more and less, they might have the word higher and lower. Okay? Third one also you can tell me. You will tell me again. The higher barrier to the entry, the dash threat of new entrant. If the barrier is very high, then threat of new entry is more or threat of new entry is less. If the entry barrier is very high, entry barrier is high means entry is tough. If the entry is tough, then the threat of new entrants will be less. And if there is less threat of new entry, then my profitability will be more. Done? Yes. Now I'm not discussing all of them because some of them are very general kind of questions. General such that it can have many variety of answers. Yeah, these general ones can have many varieties of answers. So I'm not discussing those general ones, but important ones I am discussing. The fifth one, dash refers to when an organization concentrates its efforts on a narrower part of the market. Well, what refers to when company concentrates on a very small section of the market? See, there were two important strategies. Low cost strategy, where you sell your product at the lowest possible cost, or differentiation strategy, where you differentiate your product from the other consumers, from the other products. But then there was a third strategy in which you focus on only a small group of market. Yes, Dheeraj, you can say it is a niche market, but the another name for niche market was focus strategy. Yes, Dheeraj, focus strategy. See, if you cannot think of the word focus, it's okay, because if you already know what does focus mean, then you go through this entire list You will find somewhere the word focus, then you'll realize that yes, this pertains to focus strategy. Yeah. Uh, then look at number 9. Dash advantage can be achieved. Dash advantage can be achieved by superior customer responsiveness. If you have a very good customer responsiveness, better customer services, then which advantage will you achieve? Then will you achieve a low cost advantage or will you achieve differentiation advantage? Well, if you are giving superior customer service, definitely it will not be low cost because cost will never decrease if you give more service. If you give more service, then you can differentiate your product from the competitors. Yes, it will give you differentiation advantage. Yes. Then come to number 13. The performance pyramid is based on a range of objectives for both external effectiveness and internal efficiency. Internal efficiency relates to productivity. Then external effectiveness relates to what? Well, if internal efficiency will improve productivity, chapter 7 yaad karo, then external effectiveness will improve customer satisfaction. External effectiveness like on-time delivery. What does it give? It increases, yes, customer satisfaction. Yes, Deepa. In TPM, unplanned downtime loss. याद करो O double E measure. In that O double E measure, voice not clear. Raja, voice not clear. Anyone else facing that issue? Voice not clear. Because from my end, it seems to be clear. Raja Thakur, so many times voice not clear. Somebody else, please respond. Is the voice clear or not? No issue, Vaitai. Just tell me clear or not clear. Okay, no issue. Okay. Okay, then Raja, I think there must be some issue from your side. Please refresh YouTube. You should be able to get the voice. Okay, okay, Vaitai, I got it. So under TPM, we have done the topic about OEE measure, overall equipment effectiveness. In that, unplanned downtime loss includes dash and unplanned maintenance. Now see, this is a very open question because unplanned downtime can include many problems. But you find out of all these which problem can become an unplanned downtime. Let's see. Let's see the list. Unplanned downtime, procurement, Six Sigma, differentiation. See the list. What can be put under unplanned downtime? Well, none of this seems to be. Cost plus, higher, lower, customer satisfaction, equipment breakdown. Yes, it was here only. Yeah, equipment breakdown can be put under the unplanned downtime. Yes. Okay. Six Sigma can be used with dash by providing more thorough measurement system based on statistics. Well, Six Sigma can be mostly used along with balance scorecard. See, Six Sigma can be used with some other performance measure. Well, there is only one performance measure name which is given in this list. You can say balance scorecard is my other performance measure which can be used with Six Sigma. 16th. W manufactures the toy baby in lots of 7,000 and then approaches various independent toy shops trying to convince them to stock that product on their shelves. This is an example of dash supply chain. Come on, you know this. You are making production as per your own lot size. And then, oh Deepa, no Deepa, you are making production based on your own lot size. And then you are pushing it to the shopkeepers to keep it in their stock, to keep it on their shelves. Yes, this is push model. It's exactly opposite of pull model, Deepa. Okay, that's okay, Deepa. I saw your message. There's no meaning of retracting it now. Okay. Number 18. A service provider such as a reputed chartered accountant firm, WI, depends on quality staff to deliver quality service. This is an example of dash market. Say supply chain, you had six different types of markets. Now six different types of markets basically means that who is more important. Well, in case of a CA firm, in which the services depend on quality staff, quality articles that they have. So all the services of a CA firm is very much dependent on the quality of the staff that they have, because these are all personalized service. So such company or such entity, you can say, is an example of the employees market, recruitment's market. It's an example of recruitment market. Because in this types of company, the staff is very important, so they need to get a good staff, they need to get good employees, they need to get good employees from the recruitment market. A supermarket sets up JIT with supplier for short-term items, for short-life items such as ready-to-eat food, in order to retain customer interest in an instant food product. This is an example of dash market. Well, in case of JIT, can I say that in case I follow JIT, then for me, supplier becomes very important. I need to choose a very good supplier. I need to choose a very good supplier. Yes, Deepa, that is a pull system, but it is not a pull market. What type of market will this refer to? This will be a supplier's market. Because I need very good suppliers, I need to get a good supplier for my JIT system. Why where is reference here? There is no referral here. Why referral is the next question. Dekho, question 20. A bank refers customers to providers of insurance service. ICICI Bank refers my name to ICICI Insurance. That is called what? That is called as referral market. Yes. 21. W insurance firm was worried about the poor performance of one of its types of policies. It found that the policy was not profitable when sold to recently retired people. Otherwise, it was profitable. See, notice, they identified that the product is not profitable when they sell it to recently retired people. But other than the recently retired people, that product is profitable. This is an example of dash analysis, which analysis will tell you that retired people are less profitable and other people are more profitable. Which type of analysis will tell you that? Well, to get that answer, you must have done profit calculation customer wise. You must have done customer wise profit calculation, because you split your customers into various segments, and for each segment of customers you calculate profit separately. You calculate profit for each segment of customer separately, then you will come to know that the segment of retired people customers is less profitable, remaining customers are more profitable. So this means that you must have done profit analysis customer wise. What is that called? Let's see the names. Customer wise profit analysis. Yeah, CAP, customer account profitability, chapter 7, chapter 9. Yeah, customer account profitability, meaning customer wise separately you calculate the profit. customer account profitability. Question 25. The principle of controllability is required to be considered when using dash measures to assess divisional performance. Well, controllability will be considered while using financial measures of performance. Yaad karo, in our formulas of ROI and RI, at all those places, I have specifically written that you will take the profit controllable by the division. Controllable profit, controllable contribution, assets controllable by the division. So that concept of controllability will be required when you use these financial measures of performance. Not distorted by inflation is a benefit to an organization of using dash performance measures. Well, financial measures, will they be distorted by inflation? Yes, inflation will reduce my ROI. But which performance measure will not be distorted due to inflation? Non-financial. It is a benefit of non-financial measures that it is not distorted by inflation. W has set its staff targets relating to improvements in the number of customer complaints received. In relation to performance pyramid, this is related to dash level. See, they have given staff targets. They have given targets for each individual staff. Now you remember, in case of performance pyramid, what was the main crux in performance pyramid? The main crux in performance pyramid was that it will relate the overall strategy with the day-to-day operations. Now, giving staff targets, giving targets to individual staff members is a part of strategy, or is it a part of day-to-day operations? Well, giving targets to each staff is a part of operations. So it is related to the operations level, operating level. And the last one, under building block model, the dash for business are referred to as dimensions. You know that dimensions means the CSF. CSF are known as dimensions. Done? Yes, most of them I have discussed. The remaining ones you need to read on your own. Well, that covers a fast summary of the entire RTP. Any questions? Okay, I hope you all have joined my Telegram channel. I'll be giving you updates for your exams, if any, on the Telegram channel. Hopefully for May 22 exams, there are no more updates because the exams is just around the corner. But if you have exams in November 22 and if there are any updates, I will be keeping on posting the updates on the Telegram channel. Yeah, so search me on Telegram, get subscribed to the Telegram channel. You'll get all the updates from me. Also, if you need my material, you can get it from there. And those of you who have attended my regular batch, I will be sharing with you certain necessary examination tips. Not on the video, I will be sharing it to you on Telegram. Yeah, I'll be drafting certain examination tips, suggestions for you, important, very important tips for the exam. I'll be drafting them and posting it on the Telegram channel. Why am I giving it in writing? Because if I speak out suggestions for you, you will enjoy now, but you will not remember. And what happens is, by the time exams are coming, by the time you reach the exam hall, you forget most of the suggestions that I tell you. Isn't it? Yeah. So I don't want you to forget certain suggestions that I give you. So I will draft them in wordings and post it on the Telegram channel. Also my Telegram discussion group. Please save that note. Yeah, save that and read that before you walk into the exam hall. Yes, that's all. Thank you very much. It was lovely teaching you all, guys, and all the best for your exams. All the best, all the very best, and do let me know how did you find the exams. These are your last exams of your career. Enjoy these exams to the fullest. You don't take these exams as too much pressure. Rather, you enjoy these exams. I would rather not say all the best. I will rather say enjoy the exams. Yeah. That's all. Thank you very much. Bye bye. Good night. Bye bye. Bye bye.